Alrighty, welcome back to the weekend video. Welcome myself back to the weekend video because it's been a while. But here we are. It's Saturday morning here in a stormy west coast of Ireland, and it's been a pretty interesting week. I think I can speak for all of us when I say that. It's been even more severe and more intense than I thought it would be. I think everybody and their mother knew that something was coming down the pipe in the stock market. Something was coming. Like it couldn't go on the way it was going. It was impossible. But I'm not sure that even in my wildest dreams, even in my wildest bearish dreams, that I could have come up with the scenario that actually happened. But anyway, we'll get to that in a while. Here is I'll just start on the FX, and we'll get into that later. There's been some developments in dollar yen. If you were reading last night's update, you may want to stick around for that too. Okay, so here's Eurodollar. Finally, we got a retracement in either a second wave. This is the 4-hour chart. So this could either be a wave 1, 2 down to begin wave 3, or it could be a B wave as shown in the alternate account here. It could be a 3 waves up in A, 3 waves down maybe in wave B, and then beginning of a 5-wave pattern up, which would target around that 112.39 level. So I can either rule it in, or rule it out at the moment. But for the moment, both wave accounts were calling for a retracement rally, and we've got partial anyway. So let's see how that goes. You can see, I'm not overly enamored by this particular account at the moment, but it works to a certain extent, so I'm keeping it. We've got a wave 1 down, or this could be 1 degree higher as well. This could be a wave 1 in green. And a wave 2 up. So I think the wave 2 counts as a 3-wave pattern so far. We've got some sort of a wedge pattern here in wave A. Probably, let's see if we can get A, B, C, D, E, something like that into wave A. Small drop in wave B, and then a rally. That's a pretty reasonable 5-wave pattern right there in wave C. So you can pull out like a little 4th wave there, and then a spike to a 5th wave high. That topped out at about 110.52, and then we had a little spike lower. I mean, we've had a retracement to a lower high, so it's it's possible that we have wave 1 down again, beginning off that 110.52 high. But we'll just have to see how that plays out early Monday morning, or throughout the day on Monday. If we start to get price pushed back up above 110.95 or 111, let's say, and it's building a more impulsive pattern, then I would probably favor that alternate account for a run up into 112.40 in wave C. So Monday should tell us enough to make a call between one counter or the other. So far so good. Let's see what next week brings, eh? Okay, there's cable. Cable just, or pound dollar just isn't playing ball yet. This whole decline off the last day in December, actually, where we reached that 132, 133 high, 132.80 high. And I was expecting some sort of an A, B, C pattern to play out, but we seem to have just drifted lower and lower in kind of an endless corrective structure, which can still be viewed as a B wave, even though we've broken to a new low below the wave 1 low there at 129.03. So this could still be 3-wave B before we get a rally in wave C to complete wave 2. I just don't like this interim high here as a wave 2 high, and I don't like the action off that high either. It's still very corrective looking. Let's get into the hourly chart. So you can see this is the drift for the last 2 months that we've experienced. They all seem to be in 3-wave forms as well. So we've got 3 waves down, we've got an ABC, 3 waves up, an ABC, 3 waves down, It could be in 335, three waves up here. You'd be getting 335 down, three waves up, and zigzag down into the spike low on Friday there. So that reached 127.21. So I still favor a run up to about 132.80. So that could be 400 points there, 450 points in wave C. We just haven't had the action to begin a third wave down yet. I think if we get we've got these interim highs here, 130.18. If we break 130.18 again, we'll then more or less confirm that wave C has begun. But just because we haven't got it yet doesn't mean it ain't going to happen. This action here is not impulsive at all. It's corrective to the downside. I think we need to retrace that one more time, break above the wave A high before we start declining into a third wave. Okay, dollar yen has really kicked me in the teeth this week. We got a real spike lower after some nice kind of, let's say, constructive action. We got this real hard hammering lower on Thursday and Friday. So I return to my triangle pattern again, and I had previously thought that there was a wave D and E completed within here, within this kind of ranging pattern here, but obviously not. Wave D has extended, and wave E is pushing lower again. So you can see off the high is way back in 2015. That's the wave A high, and we've got a three-wave pattern down in A, three waves up in B, a very long C wave, A, B, C, down into wave C, and that wave C low happened in August last year, and then we've had up to the recent high in wave D, and now we should see three waves down in wave E again. And all along, the pattern is continuing the range is continuing to contract. Pattern is playing out in five waves, so I'll stick with the triangle for as long as it works. Okay, so the 4-hour chart here shows that top in wave D. This is a pretty damn common pattern higher off wave C, so it looks like it's some sort of triple combination. So that'd be like a 3, 3, and 3 up into wave D, and then a pretty severe sell-off down into wave E. Now this could be all of wave E complete. I'm not against that at all. I would, I suppose, caution myself on jumping to that conclusion, and for the moment, we'll allow for a larger pattern to play out. We've hit that previous B wave low here, that 107.60, and we seem to have bounced off that at the moment. So, hey, let's see how that goes. Here's the hourly chart. So we've got three waves down in wave, let's call it wave A of E. So we go A and then three waves up in B, and then maybe a five-wave pattern down into wave C before we start rallying again. And in the daily chart, that would be a rally up in wave C, and we would expect it to break above at least the wave A high. That would be at 125.89. Okay, so for next week, it's let's see if we can push to the end of this E wave. Okay, stock market. Here's a daily count on the stock market. Is it? You can see, it's quite interesting. I mean, we topped out at about what was it, 29,500 or so, and we reached a low there this week, 24. So 4,400 points or so. Let's call it, or 4,500 points. Let's say into the low. The whole decline in 2007, 2009, I think was about 7,000 points. So in a week, we got a good 60% of the whole 2007 and 2009 sell-off in terms of points. That is wicked. I knew there was something building. I didn't expect it to be that quick and that vigorous. Now what we have to expect is some sort of reaction to that vicious sell-off. I am lining up for a three-wave pattern to build some sort of a right-hand shoulder here. So we've got a head and shoulder building. This previous left shoulder seems to be coming in around the 26,500 level to 27,000 level. So let's get into the 4-hour chart and we'll see how that is playing out. So that's this kind of shoulder that's built on the left-hand side here. We've got about 27 to 27,200, let's say. So it's not unreasonable to expect some sort of a reaction back up to that, above that 27,000 level. This is nothing but impulse up to the downside, so it's 5-wave pattern down. Does suggest that the bull market is over. I like the way that we've taken out so many previous 4th wave lows. So within the preceding bull run, we've got these 4th wave spike lows all taken out, and we almost got back down. Let's say that previous wave A level there, or the lower extent of this triangle would be 2508. So that was it was 24,590. 24,590. We didn't quite reach that, but we breached enough previous support levels to indicate that this rally is done. What we need now is a 3-wave pattern to the upside, a corrective lower high off the all-time high, and then we shall build towards the 3rd wave down. And the 3rd wave down off this high will be where a lot of the damage is done. We could also go 1-2, 1-2, 1-2, like a series of 1-2 patterns down. That's probably most likely what will happen. But the first strike has been taken, let's say, and from now on, I don't think this market will take any prisoners. Well, it surely didn't over the last week, and it doesn't care. I suppose that's when you build a monumental bubble, it's going to find something to prick it, and we seem to have found that thing now. So there's no building this bubble back up, I don't think. So let's see if we can complete a bearish impulse pattern to the downside before we run down in a 3rd wave. The prospects for that 3rd wave would most likely bring us down around that previous 4th wave low again. So that'll be the 2018 low, Christmas 2018 low of about the 21,500 level. So that's what I've been looking for a while. It's been pretty. We've had a pretty spectacular start to the bear market. Let's see how the market reacts next week. We're going to see a dead cat bounce, so let's prepare for that. Okay, gold has been whacked by this also, which is exactly against what I didn't want to happen, but hey, that's what happens. I am still working on a larger 3rd wave, so I think this sell-off is all part of this larger 3rd wave up in blue here. We could, there's every chance to have wave 1, 2, and 3 of that wave 3 now done, and we're working on some sort of a 4th wave now. So we have wave 1, 2, 3 up to the recent high, some sort of 4th wave underway now, and then a rally up to wave 5. And that rally into wave 5 should bring us back up towards that 2000 level, all going well. The alternate count that I like at the moment is for a series of 1-2 waves, and this would be an even more bullish count. So it'll be wave 1, 2, 1, 2, 1, 2. So if that were the case, we would have a 3rd wave acceleration, and that would carry us most likely up above 2000, probably the 2500 level, in a third of a third of a third of a third kind of scenario. So in case you haven't picked it up, I'm still bullish on gold, even though we've got that sell-off. Here's a 4-hour chart. I'm working with the main wave count showing a top in wave 3 now in place, and we've got some sort of a 3-wave pattern off that into wave 4. We're back down around that previous 4th wave now again. So well, at least on Friday we had a little spike off the extreme low. So we could have, there's every possibility that we have wave 4 done, or the more kind of conservative way to view this would be 3 waves down in wave A of 4. So I think that's kind of what I went for on the hourly chart. So 3 waves down in wave A of 4, should see 3 waves up, probably up back towards that B wave high there, so the 1650 level in wave B, and then possibly 5 waves down again into wave C of 4. And like I said, there's also the chance that this sell-off was maybe too far too fast, and maybe that's the whole of wave 4 now done. Who knows? But that's the possibility that's already there. If we see a 5-wave pattern build off this low, and then a bullish higher low, well, I would kind of steer it in the direction of the alternate count. But for the moment, I think we'll see a rally probably back up towards above 1600, back above, sorry, up towards 1650, most likely in 3 waves as a B wave completes over the next couple of weeks. Okay, crude oil moving lower again. It's been a pretty wicked down week again in crude. There's a couple of scenarios that I'm working with. This could be if we get to the daily chart here, this could be wave 3 down. I mean, it definitely does fit for a wave 3, but we haven't traveled far enough yet for this to be a wave 3 complete. Overall, in the daily chart here, I'm looking for either a 3-wave pattern down around that 25, down to around that 25 handle, 3 waves down off the 3 waves down would most likely be as a part of a wave C. So I know wave C usually traces out a 5-wave pattern, but this could be what the pattern in crude is not. There's never anything straightforward about it. But for the moment, we've got 5 waves down underway, and the working thesis is that this is a 3rd wave down. How this 3rd wave down is playing out is another question. So we've got wave 1 down into the November 18 lows, wave 2 up into, that was the April 19 highs, and then we've had another series of 1, 2 patterns, and then the recent declines have been in wave 3. Okay, let's get into the 4-hour chart. That shows the beginning of that wave 3. That's the hourly chart. Shows where I'm going with the alternate. So off that wave 2 high, we could have 5 waves down in wave 1, 3 waves up in wave 2. Now we're spilling lower into a wave 3 in green there. So that'd be wave 3 of 3. The fact that it's wave 3 of 3 would suggest that we have much more to go. The alternate count is a little more lenient. It's 1 degree higher, so we've got wave 1 of 3. Wave 2, sorry, it should be wave 2. Forgive me. I am only human. Wave 2 of 3, 3 waves down into wave, 5 waves down into wave 3 of 3. An ABC pattern into wave 4 of 3. And now we're working on wave 5 of 3, as you can see down here in the alternate count. This wave 5 could be extending right now as a 3rd wave extension. So we have wave 1, 2, 1, 2, 3, 4, 5. And then we'll get a series of 4th and 5th waves to complete that 5th wave. So either way, it looks like we're still working on 5 waves down. We should get some sort of corrective disruption this week coming in a series of 4th and 5th waves. So it's either 5 waves down in wave 3, as I'm showing, or 5 waves down in wave 5 alternate. And if you go to the daily count again, That is all within this third wave down here. And in this third wave down, I would expect to see at least a break of that 42 level, possibly back even below 40 again to complete that third wave. So let's see how that goes over the next week or so. If we get a challenge of this interim high here, I think it's marked either wave 2 or wave 4. If we get a challenge of that 54.60 level or a break of 55 again, then we'll have to reconsider what's going on. But for now, next week it's looking like a choppy kind of completion of a series of third and fourth waves. So we'll track that as it goes. Here's the S&P. This is the 4-hour S&P chart, and it's the same count as the Dow. This is the weekly count here. You see, well, there's the just as a comparison. You can see the extent of the decline this week, and if you bring that to it's the 0709 decline, but you see we've got about 60% of the whole 2007-2009 decline happened last week. So that shows you how quickly this market turned. I knew there was not much of a floor under this rally, and I knew something was coming. But boy, even me, Perma himself, I couldn't have told you how or couldn't have predicted how quickly this acceleration lower happened. But anyway, however, here we are. We've got a nice impulsive spike lower, and what we need to do is to build a corrective lower high off that. So let's get into that's the daily chart here. You can see wave 3, 4, and 5. The 2018 Christmas 2018 low as wave 4, and then we've pushed higher in a fifth wave to complete. Okay, so 4-hour chart again. This wave 5 here is broken out into 5 waves, and we had a triangle there in wave 4 of 5, and then with 5 waves up in wave 5 of 5 to complete wave 5, and then this monumental spill lower to begin the next bear market as what should be the next bear market. We haven't got a significant shoulder back above 3,000 to act as resistance. The fourth wave correction here, the top comes in at about, well, it was 3,027, so there's nothing. 3,027, we're almost back to that level again with the spike higher that happened on Friday evening. But this spike should turn out to be a 3-wave corrective rally in a second wave. So next week, I'll be tracking that 3-wave correction higher to kind of see if we can pinpoint a wave 2 high before we turn lower again into a wave 3. And this would be wave 3 of wave 1. So if you can picture it, that's wave 1 down. Wave 1 down, wave 2 up, wave 3, wave 4, and wave 5 down, and that would complete wave 1 at a larger degree. This wave 1 in red here should break below that 2300 wave 4 low back in Christmas 18. Okay, so next week, let's get at this is the hourly chart. As we have pretty sure we have that wave 1 low now in place, given the fact that we've got a pretty reasonable spike higher off that Friday low. I'm counting this as most likely probably wave A of A. So if we can get a couple of A, B, C, rather than having to write them all again, steal them from earlier. Trick of the trade. So we bring these over here, and you can see that we probably get some sort of a three-wave pattern. I'm like a painter on one of those painting shows. Three-wave pattern up in A, 3 waves down in B, and then if it's a flat then it'll be 335 to complete wave C. That could take a couple of weeks to play out. We'll see how it goes. Wave A will probably finish next week, so we'll look for 3 waves up in wave A, and before we start to turn it over into wave B again. So that'll be the outlook for next week. Wave 2 is where the point of, let's say, the next pivot point will happen at wave 2 before we pivot down into wave 3, and wave 3 should, like I said, push towards that 2300 level. Get to the daily chart. Yeah, that 2300 level would probably come quite close in wave 3 down. Okay, so for the short term, we're probably looking upwards in the S&P, and it'll be some sort of corrective lower high, hopefully in wave 2. Okay, silver took a complete dive this week, which ruled out the bullish pattern completely on Friday by breaking that below that 1645 level. I'm still working on a bullish interpretation because I think the metals are long due a significant rally. Not that this hasn't been significant, but this action off the wave 1 high looks more corrective than anything else, and it still looks to be a 3-wave pattern to the downside. So what I'm working on now is wave 1 and 2 and a wave 1 and 2 before we run higher into a third of a third wave. The third of a third wave should push us, probably back up towards 25 again. So I'm holding on to my hat here. This is the 4-hour chart. You can see wave 1 in red here, and I'm working on a probably a flat correction. So wave A down in 3 waves, even though it's an extended wave A. Wave B up in 3 waves, and then 5 waves down in wave C. So the hourly chart will show wave C. So that's wave 1 down, wave 2, wave 3, some sort of correction higher, and wave 4 should hold below probably that 1737 level or 1740 level, and then one more dunk in wave 5 of C to complete wave 2, and then we would run higher again and look for a run higher again in wave 1 of 3. So the outlook next week is for this C wave to complete, and we'll get bullish again. I was kind of blindsided by the sell-off this week in silver, but that's life. As I said, I'm only human. I have to say that to myself numerous times, just in case I get ahead of myself. Okay, so bonds. Let's open up bonds there. I should have it open already, but I don't. Yes, here we are. So count bonds has in the 10-year has developed, but we're getting very close again to invalidating even this large extended C wave wave count. So that's the wave C that I've been looking at. It would be part of wave 2. So this C wave should trace out 5 waves and complete below 135.47. We're right up about 134.60 this evening, or on Friday evening. So unless we get a very early turn down next week, well then, excuse me, if we don't get that early turn down next week in a pretty severe spike lower, well, it'll be sayonara bearish wave count. Excuse me. The recent rally seems to have traced out a 5-wave pattern. So we've got wave 1, 2, 3, triangle wave 4, and then a spike higher in wave 5. This next wave 1 should take out the wave 4 low, and that was 127.88. You can see that 5th wave here. That's the triangle wave 4, and there's that impulsive push up above the trend channel line in wave 5 of C, hopefully of 2. Now next week, that 135.47 has got to hold. If it breaks, then I break with it. So wave 1 down must push back below this previous fourth wave support here at 130.91 at a minimum. Okay, that kind of does it. I hope you have a good weekend. I hope you're not suffering the storms and continual bad weather that we're getting hit with here. Be good, stay safe. God bless, and we'll see you on all you guys subscribers on the website again on Monday evening. It's looking like a pretty exciting week again. Next week it'll probably be some sort of dead cat bounce in the stock market, and hopefully we'll close out a corrective pattern in gold again. All right, have a good weekend. Like I said, God bless, be good, and we'll see you Monday. Bye bye.